All right, and with us today, we've got two experts for you. Ryan Dodson with Liberty Tax Services and J.W. Degance with Jackson Hewitt. They're here answering your tax questions. I love this question. It's kind of in your wheelhouse and kind of not. So, Ryan, this person says, why are state taxes taking so long this year?
Hey, Tanya, they're taking about as long as they normally do. Look, the IRS is really good. They say, hey, look, 90% of all refunds are going to come within 21 days. The state does not. And so it's kind of like riding in the car with my parents when I was a kid. When your parents tell you, we get there when we get there. Well, it's the same way with your state refund.
Okay. All righty. We will be checking in with the state to see where they are with all of that. All right, JW, this person says, I haven't filed taxes since 2018 due to my husband's illness and then his passing. He was a veteran. Should I get an accountant to file these past years, and am I going to be punished for not filing those tax returns?
Well, you definitely should get those tax returns completed. And it might be beneficial for you to go see a professional or go get assistance from the IRS if you need to file those. It's really important because you have to think about all the different pandemic, the credits, the stimulus, all the different things that were happening since they filed. They might be eligible for that, and they may be not having all the money that they really deserved. So I think it's important for them to go ahead and get that cleared up. If they're going to be penalized, it really all depends if they owed or if they were getting a refund. If they were getting a refund for those years, there won't be any sort of penalty for that.
Okay. All right, this person says, please explain about charitable giving donations. And so I guess there's two schools of thought about the charitable giving, whether you're itemizing or whether you're not.
Yeah, Tanya. So in previous years, if you itemized or if you gave to charitable contributions, you could deduct up to $300 or $600 if you were married on your tax return. Well, that's no longer the case. So you can still deduct your charitable contributions. However, your charitable contributions plus your mortgage interest plus your state and local property taxes, all that has to total up to more than your standard deduction, which is almost $13,000 if you're filing single and almost $26,000 if you're filing jointly. So can you deduct it? It's a solid maybe.
Yeah, it just changed because during COVID, they allowed you to deduct those charitable contributions over and above that standard deduction. That is no longer. Okay. This next question is, if I filed this month and they changed the tax code again, do I have to file an amended tax form? JW?
Well, it would all depend if there were retro tax laws that were coming into effect. And I really don't see that happening at this point going forward with the tax season ending so soon. So I think we're clear. I think you'll be okay. The only time you need to amend is if you forgot something, document that you missed, that you need to adjust to add that back to do your amended return to get it corrected by IRS.
Right, because if any tax code changes like for this year, it doesn't affect your taxes this year because the tax code is from last year, correct?
Yes,
okay.
So it would be implemented for 2023 that you would file in 2024.
Okay. All right, Ryan, this person says, do you have to pay taxes on Social Security disability back pay?
Tanya, it really depends upon their situation, depends upon what other income. Social Security disability is typically treated just like Social Security. And so there's a few hoops you got to jump through. Now, if you receive back pay all in 1 year, the IRS has a wonderful formula, complicated, albeit, where you can go back and calculate what your income was in previous years. And so you're not paying a higher tax rate. You're just paying the same tax rate you would have been if you would have filed your tax return in the disability year that you should have received it. So computer software handles it fantastically. But yes, there is a chance that it may be taxable.
Okay. This person says, if I have not worked at all this past year, but I own a home and have a mortgage, do I have to file taxes this year? JW?
Well, it really goes to income. If you're not required to file, if you have no income, you wouldn't really then have to then file your tax return. There are some people who, even though they don't meet the minimum requirement, they should file a tax return to take advantage of credits that they could have access to if they actually did file.
Okay. All right. We're going to take a quick break. Remember, you can text in your question. The number is down at the bottom of the screen, 336-379-5775. We've got one more segment coming up of your questions.